Okay. Good morning. If you're in the class and having trouble getting on Wi-Fi, we were advised to use Flash Zone, not WPA. So if you're having trouble with Wi-Fi, switch to Flash Zone. Okay, and we're hoping everything goes well this class. No, we don't need to talk about the morning. Okay. Okay, so today, talk starting with what's due this weekend. We have Saturday, we have the attendance quiz due, and that attendance quiz will be available sometime this afternoon. And Chapter 11 and 12 homework. We are going to do 2 Chapter 12 homework problems today in class. And if there's any other Chapter 12 homework, it is embedded in the Chapter 12 videos that you would have seen on Blackboard. The last video quiz of the whole semester is due Sunday. That's over Chapter 13. The last video quiz is due Sunday. Unless you want one for finals week. Yeah. Okay. Okay, final exam. Here's the spiel. We'll go a little bit faster today because we've been over it a couple times. Final exam is due 6 p.m. Thursday. You have to be finished by 6 p.m. Thursday. It's over Chapters 8 through 13. The learning objectives that we've covered, those learning objectives that you're responsible for are in study plan. In the next 5 days or so, I will be putting out a final exam review sheet, but its study plan already reflects the learning objectives on the final exam. And then we have the 12-point bonus opportunity that we've talked about before. The final exam is due Thursday at 6 p.m. But if you want a 12-point bonus, you have to have it submitted by 6 p.m. on Sunday, May 4th. There's no exceptions. You have to complete it by 6 o'clock Sunday. The lab is open Sunday from 8 a.m. to 6 p.m. It's pretty much exclusive use for our class from 8 a.m. to noon. So you can get in there and get it done. You have to start the exam by 4 p.m. If you're taking the exam on ProctorU, they don't care what time you start Sunday, anytime 8 o'clock or later. But you have to submit it by 6 p.m. to get that bonus. If you submit at 6:01, you will not get the bonus. So make sure you submit it by 6 o'clock. If you're a risk taker, note that your time could be different than my time, and I go by Verizon time. So 6:01 Verizon time, bonus opportunities over. Okay. So now we're on to Chapter 12, Statement of Cash Flows. Again, there's 3 learning objectives we're covering in the class. The 4th one deals with the direct method of statement of cash flow. The bottom line, the statement total, is the same under both methods. It's just a different way. So we're only doing learning objectives 1, 2, and 3. And on Tuesday, we talked about page 702 in your textbook. I went back and forth on this. I would definitely put this on my reference sheet for the exam. When I think about it and as we go through the material, this is a really good item, and we're going to go through each of the parts today. So we're going to go over the cash flows from operating activities section again today, and then we'll go through the investing and the financing as well. So these things that I'm showing you now, you probably won't have enough time to write down the whole statement if you don't have it in front of you, but know that it's on page 702 in your book. You can also go back and grab a screenshot if you need to. So the cash flows from operating activities. This section is the most important section because this is the section that tells us, is this company generating enough cash from its operations to continue to exist pretty much. If you're not generating cash from your operations, there's some doubt about your future. Know that in the first years of a startup, there will be negative cash flow from operations, and that's to be expected. But in an established business, you would expect to have cash provided by operating activities. So in this section, what you do is you always start with net income. That is always the first number you start with. So you start with your net income, your operating income, and so you always do that. And then what you're doing is you're adding a whole series of adjustments. So you start with your net income and you add adjustments to it. Okay, so we have net income and then you have this whole list of adjustments. So we have adjustments for depreciation. We add those back. The plus in front of it means you're adding it back because those are non-cash items. We would have subtracted depreciation when we calculate our net income. Now we have to add it back. Our whole objective here is to convert our net income, which was done on an accrual basis, to cash basis. So we have to add back adjustments for cash items. So we're going to add back depreciation, add back loss on sale, subtract gain. And then we have increases in current assets other than cash are subtracted. Again, this is going to be a little bit confusing at first. I would say have this on your sheet. And we're going to do a couple homework exercises that use this specifically. And you finally come down to net cash provided by or used for operating activities. If that number is negative, it means your operations are using cash. And that will be a negative and it will be subtracted. So your bottom total is all net income plus or minus all the adjustments to come up with this net cash provided by operating activities or used for. Okay, so that's section 1. That's the operating section. Now the next type of cash flow, there's 3 types of cash flows. The next one is investing. Investing cash flows are our long-term assets, changes in our long-term assets. So this cash flows from investing activities are going to be things like sales of long-term assets, like selling a building, selling land. So we have a lot of long-term assets. If we sell them, that's an increase in cash. If we purchase long-term assets, that's a decrease. If we make a loan to someone else and we collect it, that's an increase in our cash. If we make a loan to someone else, that's a decrease in our cash. So those are the 4 maybe primary kinds of cash flows from investing activities. Again, these are in your book, and I would take the time later to go through and put this on my reference sheet somewhere because you're going to use it. And you're going to use it in the homework exercise that we're going to do coming up here fairly quickly as well. So we have operating activities that we did. Now this is the investing activities, which deals with long-term assets. And then our next section is going to be the financing activities. So that's down below, the cash flows from financing activities. This deals with long-term liabilities and with our own stock. So do we issue stock? Do we sell stock? Do we purchase treasury stock? Those kind of things. And again, these are, as long as you remember, financing activities are long-term liabilities and stock, not too bad. We're going to do an exercise where we see those things in play. And then our final, so we have those 3 sections, operating, investing, and financing. And we would have gone through those in the video as well. So this is just kind of a reminder coming up to the homework exercise. And our final thing is we get our net increase or decrease in cash during the year by taking those 3 totals, the operating cash flows, the investing cash flows, and the financing. We add those together, and that gives us our net increase or decrease in cash during the year. So we add those 3 subtotals together, get our net increase or decrease. We add that to our beginning balance of cash, and then what we end up with is our ending balance of cash. And that ending balance of cash goes to the balance sheet. Okay, so we're going to do a couple questions, and then we're going to do the 2 homework problems. Okay, so first question's coming up here. The first question deals with that middle category, investing activities. Investing activities are long-term assets. In 2012, this company sold land for $150,000 cash, purchased equipment for $30,000 cash, and issued bonds for $100,000 cash. The net cash provided by investing activities is what? So I'm going to give you a minute or 2 to come up with an answer there. I understand. What we have here is we sold land for $150,000 cash. So you ask yourself, is that an investing activity? Because it's asking about investing. Land is a long-term asset, so it's part of investing. So we would include that. If we sold land, we're getting $150,000. So there's $150,000. We purchased equipment. Equipment is also a long-term asset. And if we purchased it, it meant that cash is going down. So we have the equipment going out. So we have $150,000 coming in, $30,000 going out. And then issued bonds. Bonds are long-term liabilities. They are not part of investing activities, so they're not included here. So the answer is $120,000. It's that land that we collected $150,000 for. We spent $30,000 on equipment, so the net is $120,000. And again, we do not include bonds because those are long-term liabilities, so they don't belong as part of investing. I have another exhibit from the textbook coming up next, and this is on page 701 in your textbook. It helps determine which kind of activity, operating, investing, or financing, that a certain item is. So this is an exhibit on page 701 in your textbook. And it's basically the balance sheet. And where something is on the balance sheet will tell you what kind of cash flow it is. So the first one's current assets except for cash and current liabilities go in the operating section. So current assets, current liabilities, operating cash flows. Long-term assets are always part of investing. And then long-term liabilities and stockholders' equity are going to be part of financing. So when you look at an account involved in a transaction, you can kind of tell where it's going to end up on the statement of cash flows. Net income goes in operating cash flows, and then we have all the changes in our current assets and current liabilities impacting them as well. Okay, so operating cash flows are current assets, current liabilities, investing, long-term assets, and then long-term liabilities and stockholders' equity are financing. That's on page 701 in your textbook. Okay, next question. A gain on sale of equipment is subtracted from net income. I included this one because this is a good example of how you can use that table on 702 to answer a question. A gain on sale of equipment is subtracted from net income when determining cash provided by operations under the indirect method. True or false? This is true. A gain on sale of equipment is subtracted from net income. It is one of those adjustments to operating cash flows. A gain is subtracted because we're trying to bring net income back to its cash basis, and gains are non-cash items, so we need to subtract it out. Okay. Next question coming up. Operating income is typically equal to cash flow from operating activities. True or false? Okay, this one is false, because what it's saying is that top line in the operating section equal to the cash flow from operating activity, the bottom line. So within the operating activity section, the net income line or operating income line is not typically equal to the cash flow from operating activity. So this one's false. And I want to remind you again too, when you're taking the quiz, this question could show up as operating income is not typically equal to cash flow. So you have to read them carefully, because one word can make the question change, and then the answer of course would be different. So do watch those this week, that you watch how they're worded. Okay, next up, one of two homework problems. Now, before I put up this homework problem, I want to tell you, it's exercise 12-16A. Again, this is a tremendous amount of writing. If you don't have it in front of you, I would write down the letter and come back to it at the end. Come back to it later. If you can't screenshot it now, come back to it later, because you're not going to be able to write it all right now. Okay? See, because we could spend the next half hour with everybody writing it down. So what I'd rather have you do is just letter A through S. And actually, if you're going to go back, you're going to see, I'd rather have you just kind of listen as I go along and talk about these. And what's happening here in this exercise, we have this list of items. So you have these items A through S, and what we have to do with each item is tell whether it's operating, investing, financing, non-cash, and whether it increased cash or decreased cash. Okay? So if you're going to screenshot it, I would tell you just hold off until we get through all of them, because we're going to have the answers on the screen for all of them at the end. So, but I do want to talk about each one, so this is a good opportunity just to talk about each one. So for everyone, the answer is going to be something like O+, O-, F+, F-, that kind of thing. So for the first one, sale of long-term investment. Sale of long-term investment. Long-term investments, and to answer this, I could look at that exhibit on page 702, the statement of cash flows, and basically what I'd be doing is I'd be trying to find where long-term investments are on there. So long-term investments are long-term assets, so we know it has to be an investing activity. And if we sell an investment, does our cash increase or decrease? In this case, if we sell an investment, somebody's giving us money for it. So this is going to be an I+. So A is an investing increase. And again, you'll see that time lag by the time I clicked when it appears. So again, in terms of taking a screenshot, I'd wait till we got to letter R or S to take that, because you'll see all the answers up there. Okay, next one. Issuance B, issuance of long-term note payable to borrow cash. Okay, so long-term note payable. I look at that and I think, what kind of, where does long-term note payable belong? That's a long-term liability, so it's going to go in financing. And if I issue a note payable to borrow cash, I'm getting cash. So this is an F+. It's financing cash flow, and it's an increase. Now, next one, increase in prepaid expenses. Prepaid expenses are current assets. Current assets go on the operating section, and this is where we need to look, because this feels backwards, and I'll tell you why. It's a decrease in cash. So an increase in a current asset means a decrease in cash. Let me give you an example of why this is. An increase in prepaid expense. Assume this is an increase because we just went out and paid for a 1-year automobile insurance policy for $1,000 that's going to benefit us for the next 12 months. So when I pay for that, I have an increase in prepaid insurance. That's a current asset. So I increase prepaid insurance. What happened to cash? It had to decrease because I had to pay for it. So increases in current assets represent decreases in cash. So that's an operating decrease. Okay, next item down, payment of cash dividend. Payment of cash dividend is financing, and it's going to be a decrease. There we go, financing, decrease. Okay, so then what I want to do is I want you to try these out. So we're going to break for about 2 minutes, and you can try the other ones out kind of mentally, go as far as you can, and then I'm going to run through because you've gotten the idea of what we're doing here. Okay, let's start over here. E, loss on sale of equipment.
Or investing, and then
Okay, so I'm going to the list of operating activities. You start with net income, and you have a whole list of adjustments. One of the adjustments is loss. So this one is going to be actually, yeah, it's operating because of that list of. Exactly. See the loss on sale of long-term assets. So that's where it's getting. So when you see gain or loss on sale, that's got to be an adjustment to a to operating. So operating, and we have to, since it's a loss, we have to add it back. We're trying to negate the effect of that. Okay, so it's operating plus. Decrease in merchandise inventory. Yes, that is right. Yeah, you got the hard one. But that was good. I mean, yeah, so that's a current asset. It's with a decrease in current asset, you add it back. Okay, now G is probably the hardest one we have. It's a trick, of course. Okay, so if we want to reason our way through G, I told you it was a trick. Do we have any of those choices we haven't used yet? Let me ask you this. Does G impact cash? We're getting equipment. How are we paying for it? With a note payable. Is there any cash in that transaction? No. Otherwise, they would be on the statement of cash flows. So what G is, and the reason it's a trick, is G is actually the non-cash investing and financing activity. So it's not on the statement proper. So G, when we're talking about acquiring equipment by issuance of note payable, that's going to be a non-cash item because we didn't spend any cash on it. But as an investor, I really want to know that they have more debt and that they bought this equipment. So it's a disclosure on there. It doesn't go in a section. Does that make sense now? Yeah. Okay. Probably wasn't what you answered to begin with, and that's why we just went with it. So yeah. Okay. So how do you feel about the next one? Increase in accounts payable. Okay. Accounts payable is a current liability. So want to change it? Operating. Okay, and if we increase the current liabilities, we would increase cash as well. So I think we'll go with O+. Okay, and after you do these, after we get through these, you'll be like, oh, okay, that makes sense. But that's what we're doing here. So this is operating increase in accounts payable because accounts payable is a current liability. Okay, amortization of intangible assets. Do you have an idea? Okay, amortization on when you would be taking your exam, you would have that exhibit from page 702, right? And the very second item down, you have net income, and then you add back depreciation, amortization, etc. So this is actually going to be, it's one of those adjustments to operating. It's an O+. Okay. So it's not really fair if you don't have the exhibit right in front of you here. That is O+. Does it make sense now? It's one of those adjustments we add back. If you looked at page 702, it would make sense. Net income. It is the very first line in what section? Yes. Yes. And it's treated as, if we have net income, it's a positive. So J is operating plus, another O plus. Pretty soon I'm going to run out of people getting finished with these. You're next, though. Yay. This one's not too bad. Payment of long-term debt. So we said that current assets and current liabilities are operating. Long-term assets are investing. And long-term debt and equity are financing. So we have which section? Financing. Yeah, long-term debt is a long-term liability. Okay? So we have financing, and if we're paying off our long-term liability, what are we doing to cash? You were losing it, exactly. So we would call that a decrease, yeah. So this would be an F minus, the worst you can possibly do, right? Okay, F minus. So, okay, now L is really, I'm going to do L if you don't mind. I'm going to jump right in L. Okay, I don't like the way L is worded at all. L is saying let's accrue salary expense. So what L is really saying is an increase in a current liability. L is really increase salaries payable is what L is. If we increase the current liability, we're going to have an O plus. So that basically L becomes O plus. By the way, I think for your homework, if I'm remembering correctly, that you get this exact problem. This is one that matches up exactly. So I think. Okay, next one down, I'm just going to run with these here. Cash sale of land. I sell land. First of all, what kind of account is land? Land is a long-term asset, which means this has to be investing. So I know it's an I. And then I say, what happens to cash if I sell land? Well, if I sell land, somebody's giving me cash, so I'm increasing cash. This is an I plus. The next one down, N, purchase of long-term investment. Okay, long-term investment is a long-term asset. So I know this has to be investing. If I purchase, so I could be purchasing a building here. So I purchase a building, I give up cash, so I have a decrease in cash. So this is an I minus. I decrease, investing decrease. Okay, next one down, acquisition of building by cash payment. So building is an investment, so this has to be in the investing section. It's a long-term asset. We bought the building and we made a cash payment for it. So this is an investing decrease. We spent money on the building. So N and O are the same, essentially, what's happening to cash. It's investing outflow, investing decrease. Purchase of treasury stock. As a reminder, treasury stock is our own stock that we're buying back. So our own stock, that triggers, this is financing because it's our own stock, so it's a financing activity, and we're purchasing it, so cash is going down. So this is an F minus. Next item down, issuance of common stock for cash. So this is our own stock. So again, this one will be financed. We're issuing stock. We're getting cash. So this is an F plus. R, decrease in accrued liabilities. Current assets, current liabilities are in the operating section. So if we decrease the current liability, that's a decrease in operating. Again, looking at those the rules or the template given on page 702 is really a good way to use to answer these. And then finally, depreciation of equipment. That is one of those statements, or one of the adjustments to operating, so that's an operating increase. It's added back to net income because it's a non-cash item. Okay, so if you're going to do a screenshot, now would be a really good time to do it. So we're leaving that homework problem to do the next one as well. This one's actually a little bit easier. What we have here, this is A through G, and then we have one more page of them. It's kind of lengthy. This one goes pretty fast. What you're doing here is, and again, this one matches the My Accounting Lab one again, I believe. Okay, so the first one, depreciation expense, credit, accumulated depreciation. And the whole exercise is asking whether this is an operating activity, investing activity, financing, or non-cash investing and financing. So we're doing the same thing. We don't even have to say if it increases or decreases, just which type is it. But what I'm going to do for each one, and you don't need this for the homework, but it's a good review, is A, we have depreciation expense being debited, credit depreciation expense, credit accumulated depreciation. What that is that's our journal entry to recognize depreciation for the year, for the quarter, whatever it is. So that is going to be one of those adjustments in the operating section. So we have net income. The very first thing we do is add back depreciation and amortization. And so A is operating. That's all you have to do. You don't have to tell whether it increases or decreases in this one. So A is going to be operating. That's our depreciation expense. B, we're debiting treasury stock, crediting cash. So we're spending cash. On all of these, I always look and say, what's happening to cash? We're spending cash. We're getting treasury stock. That's a financing activity. So these are really easy because you say, oh, treasury stock, that's equity. That goes on financing. The next one down, land. We're purchasing land here. Land is a long-term asset. So long-term assets go in the investing section. D, we're purchasing equipment. Okay, so we have equipment increasing. We're buying equipment. Equipment is also a long-term asset, so that's investing. So you're basically saying what kind of account underlies each of those. Now E is kind of hard to recognize. E is salary expense. What we're doing here is we are incurring salary expense. We're paying salaries here. And you look at that, and salary expense is not a long-term asset. It's not a long-term liability. It's not a equity account. It's not stock. It's not a current asset. It's not a current liability. But you have to think about what's happening here. They are incurring salary expense. That's part of net income. So this belongs in the operating section because it's part of net income. This does not go as its own separate item, but it goes to make up net income. Okay, so that's kind of a roundabout way how we get there. Okay. F, furniture and fixtures, that's just a name for furniture. It's a long-term asset. We're buying a long-term asset, so just like C and D, this is going to be investing. Entry G. Entry G, we're getting a building and we're paying for it with a long-term note payable. On this one, is any cash involved? No, this is a non-cash investing and financing activity. So it's disclosed only. It doesn't go on the statement other than a disclosure about it. So the last one is a non-cash investing and financing activity. The last one on this page. We still have several more. We have one more page of them, not bad. What is the link to the YouTube video that this lecture will be on after class? Okay, what? well, I'm going to address that. What's the link to the YouTube video that this lecture will be on after class? YouTube link is on Blackboard. You can get to the whole channel. This specific lecture, here's what happens. After class, I have to start the change over to MP4. This is not recorded in MP4. It's not recorded in a format compatible with YouTube. So I have to go through a conversion, and that takes an hour or two. And then after that, I start the upload. So the link to this specific lecture will not exist until sometime this afternoon. But the YouTube channel in general is on Blackboard. There's YouTube. Okay, YouTube link on there. Okay, so next on, continuing down the line, so more of the same. So we're doing operating, investing, financing. With H, we've got cash coming in, we're increasing accounts receivable, and we're crediting service revenue. So what's going on there is we're selling our services for a combination of cash and accounts receivable. So in this case, this is operating. We're selling our services. That's our operations. Bonds payable. Bonds payable is long-term liability. I don't even need to interpret that entry. Cash is in there, bonds payable is in there, and so that is going to be long-term liability, which is under financing. So H is operating, I is financing. Okay, entry J, we're getting cash. What's happening in J? We're issuing stock. That's what's happening. So stock is financing, so that's going to be a financing transaction. Okay, when we pay dividends, we're paying dividends in K, so we're going to consider that financing. So that's a financing transaction. Loss on disposal of equipment. Loss on disposal of equipment, that's disposal, sale of equipment, loss on sale of equipment. That's one of those adjustments we do to operating income or net income. So that's going to be part of operating income. So that's where we start operating income with net income, then we add back depreciation. The next item down, we subtract out gains or add back losses. That's what this is. So that's operating. L is operating. And then finally, our last one, what we're doing in M is we're selling a long-term investment. So we're selling off a store, we're selling off a car, we're selling something in long-term assets, and that has to be investing. Okay, and I'm pretty sure that those homework problems match verbatim, so that'll make those really easy. What I would suggest you do, though, is go ahead and try them on your own. Make sure you can identify these different cash flows. So there's that. Now we have a question or two. And this relates to something we talked about at the beginning of class. The best gauge of a company's ability to produce ample cash to continue as a going concern is net cash provided by what? Yeah. On this one, this is operating cash flows. Operating cash flows are the most important cash flow to analyze. When we're talking about judging a company's ability to produce cash to be a going concern means there's no bankruptcy in the horizon. There's no reason to think that this company is not a healthy, thriving company. The way you do that is by looking at their operating cash flows. A normal, healthy company is going to be generating cash from its operations. If you look at a company and they're generating all their cash from investing activities, that's telling you they're selling off things. They're selling off stores. They're selling off assets. They can only do that so long until they run out of those things. If you see that a company generates its cash from financing activities, that's fine. A certain amount of financing is good. But there comes a point where a company cannot get any more financing. You want a company to be able to generate cash from its operating activities. That said, if you're in startup mode, if you're a startup company, the first few years you may not have positive cash from operating activities, and that's okay. But in a normal company that's stable, and you generally want to see positive operating activity cash flow. Okay, and then we have another question coming up, talking about the statement of cash flows, what it reports and what it doesn't report. The statement of cash flows will not report what? I'm going to give you the answer so you don't have to write down all these choices. The statement of cash flows will not report. The answer on here, it's a nonsense answer, so you don't even really need to know anything about this subject. How can you report the number of checks not written at the end of the period? We don't know what those are because we haven't written them. So yeah. But the statement of cash flows, importantly from that then, to say what it does report. It does report how cash was used. It does report changes in the cash balance, and it does report the sources of cash. Again, watch how the questions are phrased on the attendance quiz for this week. Well, for any week. Okay, next question. The statement of cash flows is designed to fulfill all of the following purposes except for what? The statement of cash flows, the answer is it does not assess the collective. It doesn't have anything to do with saying can we collect our accounts receivable or not. But it does show the relationship of net income to changes in cash. It does help us evaluate management decisions, and it does help predict future cash flows. And that brings us to the end of Chapter 12. Again, what's due this weekend? We have the full set of everything. We have an attendance quiz, homework, and then video quiz 25 on Sunday. So I will see you then on Tuesday.